Now that the market has spiked up and then pulled back, I mean, obviously we're in reload zones now, I would imagine. Boom. Yeah, 78.6. And of course, this is a Wyckoff check. So this actually would be like our shark setup that we have in the library. Very typical setup where confluence of market structure plus 78.6, probably an area to take a shot at. PERP, PERP, Tether versus USD. Oh, it's a nice weekly bottom. And if anything, the one thing that pleases me, and I think you'll probably be well served for the rest of your life on this, is you're not chasing. You're looking at assets when they're down. That's always a good thing. You can clearly see the double bottom down here. So, the slick trader, I'm a crypto slick trader. Look at me, right? That would be right in there. Nice little entry. And of course, woohoo, I'm stinking rich. Huge volume. So clearly there's some sort of fundamental event that happened there. Nice momentum breakout. Beautiful W's. Did Willie actually? Yep, Willie did get officially stupid here. I think you can make the argument there was lots and lots of reasons to be bullish here. Here now? I don't know. Momentum, kind of looking wishy-washy. Notice actually, it's not really the best example, but the Bollinger Bands on RSI are very, very wide right now. You probably could expect some volatility in here. Willie is pointing down. Willie is not stupidly oversold yet. So I don't think we can declare a bottom here. Interesting too, whatever the euphoria was in all of this, where have the buyers gone? They have literally disappeared. So you're going to have to wait for some sort of higher highs and higher lows on the volume bars. If you watched any of those Coinigy videos, I did sort of the volume impetus walkthrough for them. What you really want to see is things calm down, and then of course nice big spikes in volume, and woohoo, it's a new bull market. So how long does that take to happen? One thing that was kind of handy that you can do here, if we look at volume, and you want to sort of ask yourself, is this thing ready to rock and roll? Is just throw on a volume moving average. We'll do 20 periods. That's pretty popular. And notice as soon as the moving average, probably mountain isn't probably the best. Let's go just a line here. There we go. So as soon as the volume starts breaking out above whatever the moving average is, that's your signal that, hey, a new trend is about to start. And it's interesting how volume did break through the moving average right here. And we would have been like, oh boy, the bears are wide awake. And sure enough, look at OBV cranking down. And then as time goes by, we had a reversal. Volume breaks out above here. Didn't really get any signal out of OBV there. But I suppose on the, geez, can't, how am I going to do this? I can't. So whatever the hell this day was, and there probably was a very specific fundamental event here. And OBV, of course, goes smashing through these highs, which creates a massive double top. That's probably this was a double top, but this smashes through it, which creates double bottom. That's your signal that, oh boy, something big's about to happen here. I don't know whether you could have traded that or not. It probably would have been a little bit too late. Could you have maybe bought on a stop on the move through this high? That's not a bad idea right in there. Although the volume and nothing really other than price momentum was trying to bottom. There really wasn't anything out of volume here to give you a warning that that was about to happen. Suppose if anything, if you see these W's come in at the bottom end of the range and you're short, maybe not a bad idea to maybe cover shorts. Then I guess if you are a risk taker and you did see these lows and we did work our way back down against these lows and then you start seeing a W, maybe a strap on along there and just say, look at all risk to a break of these lows. But interesting here, volume didn't help you at all there. Now that the market has spiked up and then pulled back, I mean, obviously we're in reload zones now, I would imagine. Boom. Yeah, 78.6. And of course, this is a Wyckoff check. So this actually would be like our shark setup that we have in the library. very typical setup where confluence of market structure plus 78.6, probably an area to take a shot at. And you can see it went down, up, down, breakout, came back down. I don't think you can say you didn't have the opportunity to sneak your way in there. If you're going to trade this, then I think you probably have to obey these W's. And if we break these lows, it might easily dump all the way back down to these lows. If you're going to little old lady this, just nanny nibble, all right, I don't have a problem with that. And probably going forward, those candle body highs now are probably going to be major resistance. So from 60 cents, what a surprise, that's $1.20. A double. So could I see that kind of scenario, people buying here, going to take profits up here? Okay. I would say though that, this is kind of like, and I don't know what the fundamental driver is here. Yeah, obviously, if this story is still front and center, I'm a little curious as to why the buying interest has completely collapsed here. But if this fundamental story was, hey, they just reinvented the wheel, then I don't have a problem going in and just buying this original W and like Joe six packing it. You don't necessarily have to nanny nibble. Just say, hey, we're going to be long from the breakout. We're going to risk to a break of the bottom. And what a surprise, 2-1 is going to be at a buck and change. And if you want to work your order at that 2-1, it's at the double level, that's 2.6-1. I don't see anything wrong with that. And then also too, I suppose if this W does fire, then we could start doing Foggenbaums back up top. And yeah, interesting, 4669's right up into that level. Probably going to run into a bit of resistance around 2.618. So if you are trading this, I don't really mind, maybe at this point you just wait for a W, maybe make it a little simpler on you. So you can see down here, it's trying to W out. You could probably justify a long off of that. That would be sort of like your leverage trader. So there's probably a number of different ways to approach this. You can see sell off, rally back, test of the lows, breakout. You could even argue that, hey, I'm just going to be long off of this W, and that's my risk window, which would look something like there to there. And I'm going to try and, now that we have this this W in place, maybe I'll let some go at like 4669s. Yeah, you could probably let some go at 2.618, but I don't know whether that's enough of a profit to justify. That's only 1.56. Maybe even think about David O's midpoint of the Foggenbaum, something like that. Maybe let some go if you get a pop up there, stop to scratch, and just, go with wherever the wind blows. Having said that, because of the seasonality this time of year, I don't know how aggressive I would be on something like this. Take your shot. And if these lows hold, you're laughing. If not, don't be married to it, because if it does dump through here, I could very easily see it coming all the way right back down to the original bottom.